I'm going to ask our next panel to come up. Looking at the challenges of realizing supply chain finance's potential to deliver ESG objectives, so very much segueing straight on from that session. I'd like Federico Borgmeier to come up, who is going to be the moderator for this panel. We have two panelists with us in person, Fabio Manca from Arviem and Michael Sugirin, who's the Managing Director and Global Head Open Account Trade at Standard Chartered Bank. And joining us remotely is Armand Ferreira, Director of Sustainable Finance at ING Wholesale Banking, and Jesse Van Cleef, Regional Director of Special Products at Atradius. And there they are. Thank you very much indeed.
Thank you.
I'll let you.
Yeah. A real face. I was able to find it exactly the leg of the table. Okay, so take a chance.
Oh, everyone's here. Cool. We just met a week ago to prepare for this panel. And it's good to see two of you here live. Michael from Singapore, all the way. Very good.
Good to be here. Thank you.
Welcome everyone to this exciting panel about the challenges of realizing supply chain finance potential to deliver the ESG objectives. Where does Michael go? He's left. Well, I wanted to thank Michael for setting up this summit in such a stunning environment. I think the last time I had a presentation like this was at Business School at University of Illinois, also in an amazing library. You know that one? No, Peter? The #3 worldwide, yes, amazing library. My name is Federico Borgmeier, and I'm the Chief Partner Officer at efcom in Germany. efcom, for those of you who don't know our organization, is a leading technology provider for receivables finance technology in general, and supply chain finance, which is our subject today, technology in particular. When preparing for this panel and going through the data of ESG and stuff, according to PwC, by 2025, some 5 to 7 trillion euro will flow in direct investments in Europe alone. So I think these are numbers that we have to let sink. 5 to 7 trillion, not billion, trillion in Europe alone. Independently, if that is going to happen in 5 trillion, 4 trillion, 3 trillion, 2 trillion, 1 trillion, 500 billion, huge numbers. So independently, therefore, on anyone's ecological, political, or social agenda, these are strong economic incentives to pay attention to. And we've heard Eugenio from Grupo Santander earlier today to have converted, as he said, from an ESG skeptic to, well, a lesser skeptic, or perhaps even a promoter. And if I hear the presentation that we had before, ESG is going to have a very impact in our industry. I have today a very selected group of panelists with us to discuss this exciting subject matter. Michael Sugirin he's Global Head of Open Account Trade at Standard Chartered, based in Singapore. He's responsible for the strategic direction, execution, and product performance of SC's Open Account, Standard Chartered's Open Account Trade product suite, which spans across supply chain finance, receivable finance, payable finance, and commodity finance. He's also leading several strategic third-party partnership collaborations and data initiatives to deliver new client value propositions and experiences. He was previously with JP Morgan and Deutsche Bank and has been in the supply chain finance industry for over 18 years. We have Armand, maybe you make a sign, Armand. Ferreira has 25 years of experience in the financial sector. For the past 7 years, Armand has been director at ING Sustainable Finance, where he supports wholesale banking clients to become more sustainable. Armand advises on ESG targets and finances sustainable business of corporates. We have Jesse. Van Cleef is Atradius Regional Director for Special Products Teams located in Brazil, Germany, the Netherlands, United Kingdom, and the United States. So quite broad regional scope. In addition, Jesse is member of Atradius Sustainable Committee that is responsible for the ESG strategy and heads a project researching how sustainability issues impact businesses and what products could be created to address these. Fabio. Manca is Director of Working Capital Solutions at Arviem, a technology and financing organization in the transportation space for, as you call it, inventory as a service. Very welcome. As we see, all panelists have different roles, which will give us a broader perspective. So my first question goes directly to you, Fabio, before moving to our next fellow panelist. Fabio, how do you, meaning you and your organization, of course, deal with the challenges of realizing the full potential of supply chain finance and yet deliver the ESG objectives?
Yeah. Okay. Yeah. Okay. Perfect. Yeah. So when we started 3 years ago, the offering of what we call working capital solutions to our client, this was already an add-on, so to say, or of a very core strategic objective of Arviem per se, which is the possibility to provide accurate monitoring, control, and visibility of the cargo that is in transit. And of course, this was an enabler for us to provide the possibility to use this inventory as a collateral to allow financing. But let me go to the specific topic of today. We believe that this challenge is growing more and more in terms of the capacity to prove, document, and report the status of the asset in transit. So it's not only deriving things from only political pressure or type of other, let's say, that political or trending debate. It is a real effective need for our client. You know, we have one of our biggest clients is Nestlé Group that we're operating worldwide, but we are operating with mining group that are the constant need also to document where these products are coming from. And as well as also when we are also have one program for precious metals where also the necessity to document that the products are coming from reputable sources and not and cannot be subject to any type of sanction or other type of limitation. It's very important, and that's why we believe that the combination of tight control on the origin, status, and it's not only a matter of identifying the source, but also to document. And when you're talking about environmental and safety, for example, you know, when we are moving milk powder, or actually monitoring the movement of milk powder or tea leaf, the possibility of damage also to health consequences to the final clients, it's very high. Most are quality decay and other part. So for us, embracing the ESG dynamic within our services and combining in a package that will facilitate the trade and the security of this country has been always a key point and a very challenging but interesting objective to meet.
Now, I understood from when we met first that your organization is active in both transportation and the financing part as well, right?
Correct.
Yeah. So
correct.
How do you? I mean, can you share a few words on how you
absolutely.
bring these two together? Because it's a little bit different from let's say from a financial or purely financial institution.
Absolutely, absolutely. No, actually, we have two lines of products, so to say. The first one is called transportation financing and is leveraging on the technology that we have developed and allowed at the moment that the container is closed and our device is installed and activated, allow a tracking and not only geolocalization that a lot of people can do, but also temperature, humidity, shock. And when you are dealing, for example, with electronic spare part, if the container fall by 5 meters during loading is a material difference. So we have this set of data that are allowing us, together with some of our partner banks and financier, to provide security and tracking and facilitating. We are either acting as directly with some of our trading organization, as we have in Italy, in Switzerland, Germany, in Africa, or we are acting as an agent for our financier bank or other institution. And next to this one, there is a second part, the second family of products, so to say, which is actually that I developed at the time with DHL when I was there, which is the inventory financing solution, where we are actually, but this is not really very much related to the topic of today, but it's really on a financial side. So to provide to our client the possibility to optimize and monetize the value of the inventory while it is in deposit through in a warehouse or any other.
Thank you. Jesse, a different perspective from your side, maybe.
Yes, I can, of course, give the credit insurance perspective on how we look at ESG and what's happening there. And there, actually, we looked at several stakeholders. We looked at our whole ecosystem and wanted to see what impact it could have. And there's a big difference per stakeholder, actually. You can, for instance, see today there are 2 banks in the panel. So financial institutions are for us a very important stakeholder, but obviously also regulators, our international but also local brokers, competitors, customers, society, rating agencies like Atradius we've just seen, reinsurers, and actually not to forget the NGOs. And they all have different requirements from a credit insurance company, and we try to manage them. And so far, actually, we are quite successful, but we are at the start. So we do have quite some ESG ambitions, where actually the main focus is on enabling sustainable trade. And also our customers, which obviously are very important stakeholder, mentioned that they find that most important. So they would like us to create a sustainable credit insurance policy and help us in promoting their sustainable business.
Now, when introducing you, there was this very large geographical span that you have from Brazil to Europe. Can you share with us maybe some particularities that you see in these different markets?
Yes, you certainly can. From what I noticed so far from having interactions with these stakeholders, is that the main focus on ESG, and that counts actually for all 3 elements, is coming from the EU. For instance, I gave some presentations for colleagues in Asia and the Americas. And I raised the question, is ESG a topic in your market? And then actually 2/3 said, no, not really. 1/3 said yes. So that's interesting to see. While in Europe, you see, and that especially our customers are asking for it. They start to say, well, we definitely want to have a sustainable partner there. So there's a difference, and so yes, I see some differences where, yeah, from multiple angles you can approach it. Just take again, for instance, ESG rating companies, where you see that most of them started in Europe and being bought by American investors. So there's also some view from the Americas that it is of interest, but you see that the most pressing focus is coming from the EU.
Armand, how do your organization cope with the challenges?
Yes, well, from a banking perspective, so from the lenders, for us also it's very important that we focus on ESG, just because of the simple reason that also the stakeholders of the banks are looking for this. Can you hear me well?
Yes.
Yeah.
Okay. We focus on the ESG, not only the internal focus of the banks itself and our own footprint, but much larger is, of course, the impact if we work together with our corporate clients to lower their impact and to help them to increase their sustainability. So we do that at the lending side. We have developed, for instance, the sustainability linked loan, where we link the ESG levels of the company and how they improve that directly to the interest that they pay on their loans. So that's on the lending side. In the debt capital market, you see the same happening with bonds. On the supply chain finance side, we are looking at the same dynamic where we help the buyers to give the suppliers in their value chain, which are more sustainable, better conditions than the suppliers which are not sustainable yet. So we try to help the buyers to get a more sustainable value chain in that sense. And for the suppliers, it's also interesting because the higher your level of sustainability, the better conditions you will get in such a supply chain finance program also.
Thank you. Michael, now from your side, coming from basically another very, very large regional market, Asia, maybe you want to share with us your how you cope with the challenges in supply chain and ESG.
Absolutely. Thank you, Federico. First of all, thanks for this panel. I think it's great to be in-person panel again. I think after 2 years sitting on virtual panels, it's amazing to be in person again. I think from our perspective, what is sitting in Asia, sitting in emerging markets, right? We span across 45 markets, and a lot of the markets where we sit in, the environmental aspect, the social aspect of ESG, we definitely focusing very much on the aspect of S, which is the social element. And in the markets where we sit, like Bangladesh, Sri Lanka, Vietnam, which have been very hard hit during the pandemic, we see definitely a huge impact. And I think from an ESG, we see that really as a catalyst. You know, I've implemented my first supply chain finance program probably somewhere in 2004, 2003. And the challenges then are pretty much the same when implementing ESG, right? When we speak to our corporates, it's around strong alignment at a multiple stakeholder level, right? We're not just talking to treasury, we're talking to procurement, we're talking to IT. Those were the SCF challenges. Really the alignment around the same stakeholders is exactly the same. The difference here, what we see is that there's a huge difference in terms of tone from the top, all the way from the CEO level down in terms of what is important, what are sort of the sustainable KPIs that we need to align up to. And it's great that folks like EcoVadis have been very experienced in this space, and we've been also always very closely working with them in terms of how we can work and collaborate together. I think the second, as I sort of mentioned, is the KPI element, right? What is it that we want to set ourselves up to in terms of driving ESG as an important element from a corporate perspective. The same KPI when you think about working capital, when we first implemented supply chain, those are important to also have that aligned shared objective across the corporate, else supply chain finance is not going to be successful. And I think the last but not least is the digital element, right? How do you essentially get information from a corporate's ERP that is going to give you necessary information to separate, standardize your supply chain, that you can actually rate different suppliers into different buckets, right? That is not very easy, right? We've seen our own challenges implementing supply chain finance programs, how difficult it is to extract information just for account payable information, let alone actually getting vendor-related information in regards to ESG. But I think at the end of the day, I think what is definitely interesting and I think very attractive is that a sustainable ESG or sustainable supply chain finance program is definitely going to be creating this huge catalyst for further push of this particular payment finance technique going forward. And I think the opportunity is very, very large.
You mentioned one thing that is particularly for our organization as a technologist of huge importance. So your organization, are you using a particular technology to handle your supply chain finance business? For instance, in measuring those ESGs, you said that this is challenging, integrating those ERPs and whatsoever. Maybe you can share your experience with that, because I think this is Absolutely. Where the devil is in the detail, right? And yeah.
Absolutely. I think, I mean, we, as everyone else probably has been challenged with the absence of standards at this point in terms from an industry perspective, right? So in Standard Chartered, we had launched internally our own sustainable trade framework in terms of what we sort of ascribe to in terms from a Standard Chartered perspective, also from a corporate or an FI perspective, what we deem as sustainable trade. And that allowed us to really sort of provide that internal governance first in terms of what we think is sustainable and what's not, right? So what's inside the box and what's not. But then obviously we work also very closely with our corporate clients, because each of these corporate clients, depending on what industry they sit, whether they're in fast fashion, whether in technology, whether in automotive, everyone sources very differently from different locations, from different sizes of different suppliers. So, and the driving factor for that also is very different. So it's not that we created a single standard, but it's, I guess, at the end of the day, principles that we've established. And I think those principles are very important. Then creates that foundation in terms of being able to deem what is sustainable or not.
In this one, may I just intersect also with what you are just saying, and specifically for your region, and I'm taking the example, we have now a very interesting project with a large group in Southeast Asia dealing with palm oil. And for example, palm oil is an area, I think it's a nice example. I was visiting the plantation recently, the spot, and I was impressed how fast the market and also the constraint that has been put, but as we said, led by Europe, and something has cascaded down to the production to make more sustainable and track the whole things. But I believe, and I don't know if you share with me, that it is not really about the financial institution or us as a technology and working capital, to some extent, supporting entity to dictate the rules in this part. So it has to be the market and the dynamic between client and supplier in this part. And we have to be sure that the different players at the logistic level and the financial level are coping with that and then facilitating this, because at the end of the day, what we want is to incentivize trade. So we want that the world became better and better through exchange of goods, not to put barrier or to limit. And as I said, what I saw on this palm oil case was really amazing for me to see that how you can really take a product that was very much blamed in Europe recently on this part, how this, in very few years, they were able to demonstrate dedicated area and then prepare a production that is, in my view, very sustainable and very to the benefit of the economy.
Before continuing to the other panelists, I would like to know, though, one more thing from you, Michael, because your insights of the Asian markets, when talking about direct investments into ESG organizations or ESG compliant organizations in that magnitude of 5 to 7 trillion, being it up or down, doesn't matter, but huge numbers. Do you see similar trends, tendencies, developments also in Asia?
Oh, absolutely.
Like that?
It's a very...
Including China?
I mean, that's why if you look at Asia, it's not a single continent. It's a collection of different countries and very, very vibrant. And every single Asian country has its own focus in terms of what and how they're driving sustainable. And every country at this point has their own sort of maturity level and in terms of priority as well, right? You can't compare, let's say, Singapore and then the rest of the ASEAN bloc, or you can't compare China and the rest of the sort of North Asia bloc, right? And India on its own with regards to South Asia and Bangladesh and Sri Lanka, right? So it's amazing. It's highly very thriving in terms of the developments we see across both government, regulatory, as well as from a fintech perspective. Every day we are looking at this point close to 100 different sort of financial technology companies, specifically on the ESG spectrum across different countries. It's just exploding, right? And I think that's amazing, right? How do we then, from our perspective, invest in the right technology, but also incorporate that as part of our own value and product offering, and then be able to provide our clients a more seamless, sustainable linked supply chain offering at the end of the day. And a lot of our investments are really going around in terms of data with regards to how do we really classify and separate those that are, I think there was a little diagram in terms of compliant versus non-compliant. But also how do we go deeper within the supply chain, understand really data sets around POs and invoices and deep tier with regards to really, getting to the nuts. For us in Asia, especially, I mean, if you think about the SME financing gap, 80% of Asia's GDP is powered by SMEs, right? And I think at least 80% of that don't really have the necessary access to working capital. And with the pandemic, with the disruption of supply chain is getting worse. It's not getting better, right? And that
although their financial performance, I was looking at some number for Southeast Asia, that SME operating there have are very sound and solid.
We see this now in Sri Lanka. I mean, you see in the news front line, right? We've, obviously, as most banks have downgraded Sri Lanka to what it is, but we are not going to exit Sri Lanka because we see the underlying foundations of our clients, our exporters that are servicing the large fast fashion retailers of the world, very, very sound, right? So how do you separate and look more longer term and you really keep these principles very close to you?
Thank you. Jesse, how does your organization, your space use technology to handle sustainability, ESG in the supply chain finance?
We use it in several ways. And I think the most important one was the one which Michael also mentioned, it's data. We have a huge database, worldwide database. We have a lot of buyers where we obviously are looking at probability of default. That's our key information. However, what you do see is that ESG is becoming a very important part of that particular data. And to get that data for multinationals, it's usually quite easy to receive that. However, for SMEs or smaller corporates, it's difficult. So there, artificial intelligence and data science is helping us. Was a little bit of echo or not?
I know. We have a lot of echo in here.
Awesome.
Thank you, Fabio. Sorry, Jesse. Now to you, Armand. For a bank like ING, how important is ESG for you, and why is ESG important? Maybe you want to share that. And then following that, what development do you see in the corporate markets related to ESG from your perspective?
Yeah, thanks, Federico. Well, ESG obviously is very important. I mean, it started already more than 10 years ago that in different sectors, you see that there's more and more demand for more sustainable business. I mean, all our stakeholders of every party and everybody here in the room is asking the same. Your off-takers, regulators, your value chain, your future employees, etc., your kids. So it's very obvious that ESG needs to get the attention that it deserves. And we as a bank, the same as our peer banks, are really focusing on this to make sure that the companies and the business that we finance, that those are the most sustainable ones. If we have the choice to finance a sustainable company compared to a non-sustainable company, then our euro goes to the more sustainable company. The same goes in the whole supply chain. As I said earlier, for us, it's important to help our clients, so as a buyer in this case, to help them to get their value chain more sustainable from the core, because it also means that their products or services, but mostly products that they're selling, will also be more sustainable, because the part before that has been focusing on sustainability already. So ESG is really very important. Also for us, we need to report also to regulatories, one of the stakeholders. We need to report which part of our lending book, of our revenue, so to speak, is sustainable. And when I say sustainable, it's about E, S, and G. Of course, in many sectors, the environmental part is the biggest one, but more and more also the social part gets attention. So that means that in the supply chain, we would look at, for instance, the EcoVadis score of the suppliers. It's one of the metrics that we can use to determine if that supplier is above a certain level of EcoVadis score. Then they're considered sustainable for this program, and they would get better conditions to stimulate them to become more sustainable than the suppliers which are not sustainable yet.
Armand, now that you mentioned the full ESG, social as well, as Michael was mentioning, is that include also topics like or KPIs including corruption, for instance? Because right now, with the events taking place in Russia, the Ukraine, and the governments that have certain political views, are you as a bank, as a financial organization, institution, also going to value that much stronger than perhaps you did in the past?
Well, I can tell you, Federico, for every bank, that's one of the key issues when doing international business, to focus on that. I mean, corruption, unfortunately, in some parts of the world, it's almost business as usual. Depending on the sector, depending on the country you're focusing on, but that's exactly what we need to be able to assess and to make sure that our business and the whole value chain of our clients also are not in that risk, because that definitely is one of the metrics. And also companies like EcoVadis and other rating agencies focus on that. So that's definitely one of the key issues to focus on in the social part, next to human rights and child avoidance of child labor, etc., etc. So there are many metrics that EcoVadis and their peers are focusing on, and we use their ratings, or that's one option to look at it, to use the ratings of these kind of rating agencies to determine if the company that we're looking at, the supplier or the buyer, is sustainable enough above a certain level.
Thank you, Armand. I think I would like to close the session with your statement, this last statement, and thank you so much to all of the panelists for you, and to you, of course, for your attention. But perhaps there are any open questions from the audience or even from remote participants, Noreen, I don't know.
Yeah, and while waiting, can I allow me to have a provocative question that came from what the people at the panel just said. I was listening also to what said, but in regards of the sustainability and the funding of the sustainability and non-one. But I think we have to be careful also not to get trapped into a sustainability religion approach, because reality is much more complex than what we are saying. Let me take my personal example. Now we are running out of our Kenya branch partner, a very interesting project. And this is about touching coal. But coal is designed, and I'm not a chemical engineer, but it is what they told me, it is an essential component for the production of cement, which is very important. We have some of the leading cement producer in Kenya, which are very important for the development and the overall sustainability of the economy of Kenya. But they have to use this product to do that. And so far, we only find out of here of London, only a single bank that is working with us, that is touching this product. So my provocative question is that all the discussion about sustainability and the classification of the product is all fine. But what I'm suggesting is that don't get trapped in a economic type of things, because sometimes a product that you might classify here in rich and wealthy Europe as sustainable is essential to make the foundation for the development of another country. And that's, I think that should be considered carefully, because then I've seen, too much black and white vision in the things.
And will keep us busy, I guess, for a lot more panels, right? Any questions from the audience? Yes,
hello.
please.
A quick question is Anurag Chaudhary, and thank you for all the discussion. Just as a background, before I jump into the question, I've been working with one of the big fours consulting firms on ESG related and portfolio and capital and returns. And the question starts more from the capital and the returns, and taking a step back. If you have a same client, X client, rated X or whatever, Y, and you are giving them a working capital loan, it has the same RWA as a 60-day trade financing transaction. And on top of it, when you do an ESG, it has two components added to that revenue. A, you reduce the price to incentivize the supplier coming on board. And second is the data, as all of us talked about, which increases the cost of operations. So technically, if you compare for the same borrower or the obligor, the returns in the three go down as you go down in the sustainable lending side. So the question which keeps coming up is, how do you make sustainable finance sustainable for a bank in the long run and meet the returns for the shareholder?
I can start. That's a very good question, Anurag, right? I think it comes down to what's important in longer term, right? For us as stakeholders, as participants, as financial institutions, right? And from a Standard Chartered perspective, we obviously, as most institutions, have issued our purpose statement and what we are sort of aspiring to. So we are absolutely looking longer term. We are looking to invest 300 billion in transition finance. We are looking to investing into green finance. But that's our purpose statement, and so it's no longer, from my perspective, an option anymore, right? It's something we all have to ascribe to, and I think Anil earlier from DB had put the nice sort of personal story around his son. I mean, it's an evolution in terms of how we essentially deliver financing to the wider ecosystem of buyers and suppliers, right? And so it's no longer just a short-term advantage or benefit. It's around what is right ultimately for the planet. And that's that's what we feel very strongly about. And in the markets, the way we operate, that's what clients are looking for. Yeah.
Thanks. Hi, this is Sunil again. If I may, on your behalf, Michael, answer Anurag's question in a way. I know you wanted to ask me that on my family. Our accounting system is not yet geared to account for the cost of the environment. That is the answer to your question, right? And it'll take time, but we'll get there at some point in time, because by not doing something right for the environment, what is the cost you're incurring? Our systems don't do that yet.
Well, then thank you very much, everyone. And I pass the words to you again. Thank you.